if you were to own Bitcoin in a fund or an ETF, it's still higher. It's the second highest quality property you could own.
Mm-hmm.
It's not the best property in the universe, because the best property in the universe is own the Bitcoin. But the second best property in the universe is own a Bitcoin derivative that's 1-for-1 backed by Bitcoin from a counterparty that you can reasonably trust.
Mm-hmm. Right.
And there are plenty of examples where people have buckets of money and they can buy the security, but they can't buy the Bitcoin.
So there I am, 2007, and I'm thinking the world is about to fall apart, and I'm writing about it. And, I'm one of the people that was, on the right side of that. And a lot of the people in the film The Big Short were clients of mine, and we all kind of knew what was going on. The world falls apart, tons of people make tons of money out of it, tons of people lose their entire livelihoods. This is not good. And it's not. And so I started asking the question, because people come up to me in the street and say, why didn't we know? And I'm thinking, yeah, why did I know? Well, fine, I've got a lot of experience and I managed to piece together the jigsaw puzzle, but why does nobody else get to know this knowledge? This was wrong. And this was the rise of Occupy Wall Street. This is the rise of the anger of, we're being screwed somewhere, we don't know how we're being screwed. And I believed in that too. Then I was in Europe for 2012. We almost lost our entire banking system, plus the EU itself. I remember having to go buy a generator and dried food because I thought we were going to follow Cyprus and we were going to lose the banks. Over one weekend, we would have lost the banks on Monday. The IMF forced Spain into taking an $18 billion bailout, which rescued it in time. Then eventually we end up with this Draghi, I'll do anything that it takes to stop Europe falling apart, essentially. And that stopped the tide. But the same thing happened. I was at the epicenter of it. I knew it was coming. We all made money out of it. And everybody around me, and I was yelling to everybody, listen, you've got to be careful. Friends of mine got destroyed in Spain. The property market imploded. Everybody's a real estate developer. Everybody got killed. Friends went bankrupt. And they were like, why didn't we know? And at first I'm like, I have been telling you this endlessly. But because I wasn't on television at the time, they don't take you seriously. I'm like, it's bizarre. I write stuff that the world's most famous investors read, but if I'm not on television, for an average guy, I don't have credibility.
Right.
I'm like, okay. I, at that point, started having two tangents, which is realizing I need to do something about it. That this disparate information level, that one group has everything, everybody else has nothing. And the other thing is I needed to make the world safer because we're kind of screwed. Because of this over-financialization and all the debt, that we could lose the system at any point. Nothing had gone away. The printing of money was just a way of wallpapering over the cracks that the earthquake had left behind. So I'm like, okay, what can I do? So the idea I had with a bunch of people was to try and set up the world's safest bank. And I tried to go and do that. It was slightly arrogant or stupid, probably, to try to do, because it's not easy. And we got together quite an amazing group of people. Still, we tried in Singapore, we tried in Switzerland, we tried in the US, it was just hard to do. The system is not there for you to try and change. And so in that process, a friend of mine, one of my clients, tapped me on the shoulder and said, you should take a look at Bitcoin. This was 2012. And I'd been aware of Bitcoin, and I took a good look at it. And he explained to me both the store of value proposition and the blockchain element, that anything could be trusted on the blockchain. I looked at this and I'm like, oh my God, this is the future that we need. Because the problem we've got is when a firm like Lehman Brothers goes bust, nobody knows who owns what. And somebody's going to get screwed in that equation. Just one of the very issues at the center of the system. Nobody knows who owns anything. So I started looking at that, and I started writing articles and invested in it first time in 2013. 2014, I started Real Vision because I wanted to democratize the very best financial information. Nobody gets access for an hour to the world's most famous hedge fund managers unless you've invested $100 million. Real Vision changed that equation entirely and said, listen, forget all this sound bites on CNBC of 3 minutes. It's worthless. We're going to give you an hour of the world's most successful investors, the best independent analysts and strategists, and then you have a level playing field. And that was a game changer. I mean, since Real Vision started in 2014, there's probably been 200 podcasts that's copied that model. So this is this movement. There's two things. There's the democratization of information, and then there's crypto. So crypto, as it starts building out as an ecosystem, you start to realize that, okay, this is now the fastest adoption of any technology in all recorded human history.
Oh my goodness. We are on the threshold of an explosion in innovation, and crypto is symptomatic of it. The seeds for what is about to happen were planted during the 20 years that ended with the tech and telecom bubble. Those seeds have been gestating for 20 to 25 years, sometimes 30 years, and are now beginning to blossom. And that's not even the right word. They are exploding into existence. So we think there are 5 major platforms, 14 different technologies that are all getting ready to move into the sweet spot of their S-curves. And there are going to be convergences between and among these technologies. So you're going to have one S-curve feeding another, and creating explosive energy and explosive growth. And I think in the crypto space, we're going to see blockchain technology and artificial intelligence converge and cause explosive reactions. So it's pretty exciting. Just to get back to investing in the future, when I was trying to explain to someone what I wanted to do before starting ARC, and who's not in our business, he said to me, "Oh, you mean that in the future of investing is investing in the future?" And I said, "You got it." Well, now, when I started in the business, that's the only way people thought about investing. And then we went through the tech and telecom bust, and then the 08-09 meltdown, and we ended up with huge risk aversion in the markets, and a tendency to invest very much like the broad-based indices out there. In other words, not adding much more value than the indices themselves. And the indices are where they are because of what has happened historically. The largest companies, the most heavily weighted companies in these indices are there because of their past success. But if we're right, and all of this disruptive innovation is about to explode, well, they are in harm's way.
You know, sometimes people want to own the Bitcoin outright. And I get that because our company owns the Bitcoin outright because we want to be able to transfer it to any counterparty and take custody and do whatever we want with it. We want sovereignty over it. But if you were to own Bitcoin in a fund or an ETF, it's still higher. It's the second highest quality property you could own. Mm-hmm. It's not the best property in the universe because the best property in the universe is own the Bitcoin. But the second best property in the universe is own a Bitcoin derivative that's 1-for-1 backed by Bitcoin from a counterparty that you can reasonably trust.
Mm-hmm. All right.
And there are plenty of examples where people have buckets of money and they can buy the security, but they can't buy the Bitcoin. It's in some retirement plan and you're able to buy a security, but you can't buy the Bitcoin. And there are lots of investors, trillions and trillions of dollars of money managers, and they've raised money. I might have I have $10 billion in my portfolio, and because of tax code or because of law or because of the contracts I have with my limited partners or the charter, I can't buy the Bitcoin, but I can buy a security based on Bitcoin. And so the real world is a nuanced one where there are lots of different types of capital. Not all capital is fungible, right? If I have $1 billion, it doesn't mean I can just convert $1 billion into Bitcoin overnight. I might have 100 million and all I can do is buy land. And I might have another 100 million, all I can do is buy a security. And I might have another 100 million and all I can buy is debt. If that was the case, I would prefer to have debt backed by Bitcoin, land underneath the Bitcoin miner, and a security that is a Bitcoin-backed security, because those 3 things would be sitting on a stronger foundation of collateral than to buy 3 things that have no relationship to Bitcoin. And so that's the value of Bitcoin. Ultimately, you compare gold standard to fiat standard to Bitcoin standard, and your conclusion is Bitcoin is simply digital money, and digital money is an engineered system to create a shared, immutable, correct ledger. If you were Satoshi and you were doing it again, your checklist would be, okay, how do I make it shared and open? How do I keep it from changing? You know, how do I make it mathematically correct? And then what kind of things can I put in it that will cause the entire world to want to protect it and secure it and improve it over time instead of attack it and destroy it? And I think that's what Satoshi created, this engineered digital asset network that happens to make the best monetary system that the human race has come up with. If there's ever a better one, you'll start from those principles, right, of digital money, and you'll say, how do I make it better? You know, and you could imagine maybe something better, but what's most likely to happen is the Bitcoin blockchain just migrates into the better thing.
That's right.
And it goes on.